Missing a payment on a Square loan can be a stressful experience, and it's natural to wonder about the repercussions. Let's delve into what happens if you find yourself in this situation, exploring the immediate consequences, the potential long-term impact on your business, and most importantly, what steps you can take to mitigate the damage and get back on track. Have you ever found yourself staring at a due date for a business loan, a knot forming in your stomach, as you realize the funds just aren't there? It's a scenario far more common than many small business owners care to admit. You took out a Square loan, perhaps for inventory, equipment, or to bridge a cash flow gap. You had every intention of making those payments on time, every time. But then an unexpected dip in sales, a sudden emergency expense, or a delay in client payments throws a wrench into your carefully laid plans. Suddenly, that due date is looming and you know, with a sinking feeling, that you're going to miss it. What now? Panic starts to set in. Will your business be ruined? Will Square come knocking at your door? Will your credit score plummet into oblivion? So, let's peel back the layers and understand the immediate aftermath of a missed Square loan payment. Unlike traditional bank loans where you might get a grace period, Square Capital loans often have a more direct approach to missed payments due to their unique repayment structure. Square Capital typically uses a daily repayment model, where a percentage of your daily sales are automatically remitted towards your loan. The very first thing you'll likely notice is a communication from Square. They are not going to immediately send debt collectors to your doorstep. Instead, they will typically send automated notifications, emails, in-app messages, or even SMS, alerting you to the missed payment or the shortfall in your daily remittances. These initial communications are usually reminders, gently prompting you to address the issue. They might highlight the outstanding amount and reiterate the terms of your loan agreement. It's crucial not to ignore these messages. While they might feel like an annoyance, they are your first opportunity to engage with Square and potentially resolve the situation before it escalates. What happens if you continue to miss payments or the shortfall persists? This is where the consequences become more tangible. Square Capital, like any lender, has mechanisms in place to recover outstanding funds. One of the primary tools they employ is an adjustment to your daily repayment percentage. If your daily sales aren't generating enough to cover the expected payment, Square might automatically increase the percentage of your sales that goes towards a loan. This means a larger chunk of your daily revenue will be diverted to loan repayment, potentially impacting your immediate cash flow. While this might seem harsh, it's a direct attempt by Square to get the loan back on track and minimize their risk. Beyond adjusting the repayment percentage, Square also has the right to debit your linked bank account directly if the automatic daily remittances from your Square sales aren't sufficient. When you agree to the loan terms, you likely authorize Square to do this. This means that funds could be taken directly from your business bank account to cover the missed payment or the shortfall. This can be a significant shock, especially if you haven't been meticulously tracking your account balances. It could lead to overdraft fees from your bank if your account doesn't have sufficient funds, further compounding your financial woes. Therefore, maintaining a healthy balance in your linked bank account is paramount, even if you anticipate challenges with your daily Square sales. Now let's talk about late fees. Unlike some traditional lenders, Square Capital's loan agreements often have a different structure regarding late fees. Instead of a flat late fee, the primary consequence of underpayment or missed payments often manifests as the extended duration of your loan or the aforementioned increased repayment percentage. The goal for Square is to get their principal back, plus the agreed-upon fixed fee. If it takes longer to collect that fixed fee because payments are coming in slower, that's the cost of the late payment from Square's perspective, rather than an additional punitive fee. However, it's absolutely vital to review your specific loan agreement to understand the exact terms and any potential charges for underpayments or missed scheduled remittances. Every loan agreement can have nuances, and it's your responsibility as the borrower to be fully aware of them. The long-term impact is where things can get truly serious. While Square Capital loans are not typically reported to major business credit bureaus in the same way traditional bank loans are, consistently missing payments can absolutely affect your ability to get future funding from Square. Square maintains its own internal scoring system for its borrowers. If you establish a pattern of missed payments, payment shortfalls, or difficulties in repayment, it will be flagged in their internal system. This can significantly reduce your chances of being approved for future Square Capital loans or advances, even if your sales are bound. In essence, you damage your relationship with Square as a lender, and they will be less willing to take a risk on your business in the future. So, what should you do if you find yourself in a position where you're struggling to make your Square loan payments? The absolute most important thing is to communicate with Square. Do not bury your head in the sand. As soon as you anticipate a problem, or even immediately after a missed payment, reach out to Square Capital Support. Explain your situation honestly and clearly. They may be able to offer solutions or discuss options, although these are not guaranteed. Beyond communicating with Square, it's crucial to take immediate steps to address the underlying issues affecting your cash flow. This might involve reviewing your business expenses, boosting sales, improving invoicing and collections, seeking alternative short-term funding with caution, creating a detailed cash flow forecast. Finally, consider the long-term lessons learned from this experience. If you struggle with a Square loan payment, it's a clear signal to reassess your borrowing strategy and your business's financial health. Before taking on any future debt, ensure you have a robust financial plan, a clear understanding of your cash flow cycles, and a realistic projection of your ability to repay. Build up an emergency fund for your business, a financial cushion that can absorb unexpected shocks without jeopardizing your loan obligations. Diversify your revenue streams to reduce reliance on a single source of income, and always read the fine print of any loan agreement, understanding all the terms and conditions before you sign. Missing a payment on a Square loan isn't the end of the world for your business, but it's a serious matter that requires immediate and proactive attention. By understanding the consequences, communicating effectively with Square, and taking decisive action to improve your financial situation, you can mitigate the damage and work towards getting your business back on solid financial ground. The experience, while challenging, can also serve as a valuable lesson in financial management and resilience. With that said, thanks for watching, and until next time.